It was another wild day in the markets today, and we need to talk about it. I am Dr. Stock, Doctor of Education, and do I have a joke ready? Well, just like the Cyclops who got married said, I do. We're going to take a look at the indices, and then we'll switch over to Big Tech, the Magnificent Seven, to see how the technicals are shaping up in that. If you haven't seen my morning video, go back and watch that one for the beginning of it, and then when you get further commentary in this, I'll try and include as much as I can. If you want to see how I'm playing this market, I'll tell you later about the Patreon, my options course, and how you can up your technical analysis trading game. In the meantime, let me put up SPY. We'll start there. On the charts, there we go. So we have a rising wedge pattern that we're looking at on the S&P 500, which you're not going to be able to see all of it in this view. There we go. That's a little bit more of what we can see. So right now, that's how we're operating. And let's zoom in. This is something that makes me cautiously bullish, and I talked about that. And you'll actually see some effects of why if you look at the Magnificent Seven that are coming up. So this candle span almost the entire point of this, where I said we'd be operating right in this triangle. For this week, we actually came up to that 477, 478 line. Matter of fact, 478.12 is the high today. We opened right at resistance, dropped way down, and then we closed back up near it. So we do have bullish momentum overall on the daily and weekly charts, but you can see that we're getting some of that wildness in there, especially with the inflation numbers coming out like they did, just slightly hot. But remember that December is supposed to be one of the coolest months on a record as far as inflation goes, and instead it wasn't, and that was one of the things that rattled the markets. Even though the numbers themselves weren't that bad, I think we're still in a decent path here, and I think that's why we recovered the way that we did. Moving over to QQQ, you can see we didn't quite make it up to resistance on this one. I think Magnificent Seven had a lot to do with that. When you look at their charts, we had a nice Ving out. This is the daily chart that we're looking at, so now we're not going to see the intraday movement that's in there. By the way, I did some day trading today. Worked out fabulously for me. So you can notice we're still in that same pretty much triangle, even though I don't have it drawn on here in white like I did the other one. Said this is where it'd be operating, and so that's where we're operating. We have to see if we break up to the top. If you can see, we still have a capped upside. Down off the bottom of this thing, we have the 50-day SMA as support for us, so that's what we should be watching for in QQQ. IWM is Russell 2000, and man, I'll tell you what, the RSI, I didn't talk about it this morning, but we are down near 50 on the RSI. We did break down through support just for a moment, little peekaboo, then came right back up. Inside here, we could possibly be seeing a bear flag coming off of this one. So should we break down through support, we could have a decent fall for the small cap. So we wouldn't be watching for that one, especially if we see the momentum continue down this way. And I don't have the EMAs up. I'll put them up right now. There you go. We actually had the green one, the 5 crossover the 13. That's a slight bearish sign, near term, short term, but breaking down through that 50, that's that next thing that we need to watch for. I think that we find support there. We might bounce and hit back up to resistance. If we're down here, that would become resistance instead of support like it is now, and then possibly trail off from there. That's if the market does happen to sell off. We got to be watching for that. That's if we break support. We could see that happen. Instead, if we end up breaking through resistance, that's something that could most definitely be good for us to the upside. And then we undo the technicals that we see right now that are just starting to shape up, even though what we have for the 5 crossing the 13, and then also the RSI, we don't have confirmation yet there for what exactly is going to take place next for the Russell 2000 stocks. Now for Big Tech, check this out, because I talked about this in my morning video. Like I said, go back and watch that one. We have rising wedge patterns happening like pretty much, it's the majority of Big Tech, but nearly all of them either shows it now or has shown it recently. So here's Microsoft, came up and hit the top of the trend line today, and we most definitely sold off and closed. So we peaked today. Where was that high price at? The high price was $390, and we closed the day at $384. So we came significantly off that peak right now. So you can see the technicals are holding up right now, and we do want to watch and see what part of this we break out of. If we break down through the bottom of this, we have support right now at about 375 as we look at Microsoft. But should we break through that, the 50 period is right here. It's not too far away from where we're at. So we also want to keep an eye on that, because as of today's close, that's at 370. We break down below that, that can be a bearish sign for us. So I'm cautiously bullish. I think we have some time to ride up in the markets, and I think we're still seeing that happen right now. But I think Big Tech, especially where Nasdaq is concerned, the Nasdaq 100 with QQQ, that's something that I think is very much worth our while and much worth watching, because they led the way in 2023 on the way up. I think they'll lead the way in 2024. If they drop, they'll also take Nasdaq with it. So we're going to be watching for those, because that could be a turning point in the markets. Meta, again, same thing here. Not much change from yesterday's close anyway. We're at the top of this pattern of the rising wedge pattern, and you can see today we came up and we touched it again. Then we sold off significantly and ended up closing close to where we closed at yesterday. So down just a about 1/5%, almost 1/4%, right in there in between the two of them. So we can see the same thing happening on Google. This one looks a lot like what we saw with Microsoft, where we actually came up and then hit the top of this and then sold off significantly. So like I said, the technicals are holding up. And if you're looking at this formation, then you could have actually watched for that resistance to take place. And when it did resist, placed a short order intraday, and you could have made some probably significant profit off of that movement. So over to Amazon, same thing. Look at that. Right up to the top of the trend line, rejected. Excellent technicals that are on here, and this is totally something that you guys can do too. Like I said, link for that course down in the description. Go ahead and check it out. By the way, massive savings if you use the code word TRADE, TRADE. As a matter of fact, let me pop that up for you real quick right now. With the technical analysis course, there is tons of value that's in here. Not only is it something that a lot of people have come in the Discord and said, I paid for it all in one day, one transaction. Some people, it takes a little bit longer. There's never any guarantee of profit, but I can tell you that it's wildly popular and the people in there massively successful in sharing those successes. And it's a learning community. So the people are there helping each other, answering each other's questions. Mo does live teaching sessions over there. I have an options series over there as well, where I have 3 videos that I added in talking about when to buy calls and puts. And there's also the live teaching sessions, which you can see right here on your screen. Lots of value that's in this. And if you are investing in yourself, this is one of those things that can pay off big time, pay off in multiples. Like I said, no guarantee of profit, but I can tell you from the chatter that's over there, from the reports that are over there, it is very positive, very strong. Mind you, I use options myself as I do a lot of my trading, especially the intraday trading and the day-to-day trading. And in order to do that, I have an options course that you can go ahead and check out from the very complete beginner. I'm adding in this week, I am adding in the applications of those options trading. So watch for this to change for that 9 post last update in September. You're going to see that change to January. And then we're going to have a few more videos in there as part of the series, so you can really up your trading game with options as well. And if you want to see my buys and sells, you can do that through the Patreon, in which I have my own private Discord that's over there as well, where I post those buys and sells. And I also have my Nvidia stock price prediction and earnings projection, and my Tesla stock price prediction and earnings projection over there. And I'll be updating the Nvidia one very soon. It will be within the month of January, so that we're ready to go. We can plan things out for February. And then Tesla, it's already updated, already ready to go for their earnings at the end of this month. So go ahead and check that out. All right, let me bring that down and we'll get over to Nvidia, Tesla, Apple, and then also, like I said, Bitcoin. So I'll put the charts back up here for you. Nvidia, this rising wedge pattern that we have, you can see the technical did play out, that the market opened and it dumped off a little bit, and then it recovered along with the markets after that. And you'll notice that it caught this top trend line that we have here. Once again, the technicals are on point. They are right there. And like I said, you guys can do this same thing. And it's just something to study, to work with over time, to figure these things out. And you have lots of people there to help support you and help you. That technical course is one thing. I'm also there in my Discord where you can talk to me, ask me questions as well. And it's one that I would be absolutely happy to have you over there and talk with you and have you part of the community. So come on over. So moving on from that, into Apple, what we see here for the rising wedge pattern for Apple here shown in purple, that's one that also played out. We went all the way down almost to the 200-day here in yellow, and you can see this trend line that we have right here where we actually caught that support, and so now we can count on that for support for a little while longer. We are still down below the 50-day. We have to watch and see if we get rejected there. If we get rejected off the 50-day and start to retrace back downward, breaking through this support, we could possibly see that as a bearish sign. We're also going to break the 200, so we have to watch for that one. The RSI for Apple is still down in bearish territory. Moving over to Tesla, we have a symmetric triangle pattern, so not a rising wedge for Tesla like we did for the other ones, but Tesla is still, it's a little bit different because even though it's big tech, it still gets lumped in with automotive, and so it doesn't necessarily always move like we have with the rest of the big tech stocks. So you need to keep that in mind as you look at it. Now, mind you, it did have a rising wedge pattern. I'll draw it on real quick. Right back here, we actually had the rising wedge pattern for the last, for the earnings going all the way back to July. And then, man, oh man, did we get a sell off there. So you can see the effects of the rising wedge patterns. They really are important reversal patterns to pay attention to, along with other things. They can't just stand alone. There needs to be confirmation. Well, what's going on more recently with Tesla, the thing that I'm watching is the fact that right here, sorry about the stray mark, but right there, that part that I just circled, we dropped down below the 200-day. That is a bearish sign. And what else we're looking for is right here on the chart. We're watching this. Oh my goodness, that is not the paintbrush. There we go. We are looking right here on the trend line to see if we get that bounce and then head back up in which case we're still filling out that symmetric triangle pattern. We consolidate a little bit longer, or if we pass down through this, which could be a further bearish sign, we need to watch and see for Tesla, and this is absolutely enormous. I apologize, I'm drawing all over this thing. This is an absolutely enormous opportunity that if we're tracking, we can take advantage of up or down for Tesla, and it depends on which part of the trend line we pop out of. Right now, like I said, it's throwing a bearish sign at us. Big bank earnings tomorrow. Let me take this down and put me up there. Big bank earnings tomorrow, 8:30 a.m. I believe, or right around that time, 7, 8, 9 o'clock. We should hear from the banks, and that's Eastern time, by the way, market time. So we should hear from the big banks, and that's really going to signal to the markets, I believe, especially what they have to say about the outlook for the economy through the rest of 2024. That, I think, is going to be highly impactful to what we get, and it's going to determine if we stay in those little tiny triangles that I showed you in SPY and QQQ, and also if we're going to break down through support or go back up and retest resistance for IWM, which tracks the Russell 2000. Tomorrow's huge. It's very important. Keep on watching the big tech stocks. Watch that technical formation that's there. If we break out the bottom of them, that could be a significant drop. And because they are big companies with really large market caps, that means we could also break down through with the markets. We could also push down significantly on those. Again, still cautiously bullish, watching the markets all the time, watching big tech, seeing what exactly we can expect to see coming up for us, because I don't want to be caught off guard. I'd rather be caught knowing ready which way to go. And just like I do with my day trades, whether up or down, by being able to predict what direction it's going next, I can use calls, I can use puts, I can go long, I can go short, whatever, in order to profit no matter the direction of the market. And so that is something I can do to always feed my retirement and my long-term investments, and it works out very well for me. If you guys want to learn those technicals like I do, the link for the course is down in the description. Make sure that you use the code TRADE for massive savings. It is a huge discount off the course price, and it's something that has the potential to pay for itself very quickly. And just by you investing in yourself, you can take advantage of that. Also, if you want to see my buys and sells and how I'm playing this market, you can talk to me and my other community members through the Patreon, through the Discord that's over there. That link is also down in the description. As always, guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.